Good evening, ladies and gentlemen. This is Real Estate Trading Frank. It's approximately 8:39 p.m. on a cloudy and somewhat rainy evening here on the New York City, New Jersey waterfront. This is a strategic webinar, midweek webinar. We do 2 or 3 a week instead of doing long-winded blogs. Session will be recorded, uploaded to the Clueless 8 YouTube channel, and will be available for viewing by all members or anyone out there who has access to the internet. Please spread the word for our YouTube channel, Real Estate Trading, as well as the Instagram channel that I keep on pushing, because we have had enormous response from a lot of people out there in the online universe, from here to Russia to Middle East to Asia. And I do put out some of the highlights of what we're doing, and it is helpful, and I highly suggest that all of you follow. I appreciate that. It is primarily to expose our service to other people out there, what I call the lost masses, and as well as get a lot more new members, to be honest with you, into our service. So that's where we're coming from. Okay. Full disclosure, this is purely for financial education, not for any solicitation or advice. And let me begin. So, a couple of things that I would like to point out, and give me 1 second here. I'm just going to attempt to do this right. While I'm trying to get my little writing pad out there, let me just point out a couple of things here. These are extremely difficult markets. These are very difficult markets. These are markets that are full of sudden volatility. I don't blame anybody who is not fast enough, or mentally and as well as on the computer, to attack the markets like we do. I had a very nice green day. Primarily because of 2 or 3 major trades, reversal trades. And at the same time, I'm very robotic in the things that I do. And I know many of you are trying to get like that. And I think it's going to, I think it's important. It is not a market which goes up in a straight line or falls on a straight line. You all know that. And I think I have it. Okay, great. There we go. Bear with me 1 second, and let me see if I have connection. I do. Okay. So,
Hi, Frank. It's Lisa. I just wanted to jump in for a second and
sure.
ask you if you could focus tonight, purely on the technicals. That would be fantastic.
Absolutely. So just give me 5 minutes to just go over some broader points, and we're going to dive into the technicals. Is that good?
Thank you. Great.
Okay, no problem. So, here is the market big pick. All right. Risks. We have China. We have Canada. We have Trump tweets. We have Wall Street analysts. Okay. Oops, kind of coming out straggly. And we have volatility. Okay. So bottom line is very simple. This is the bigger picture in the market. Sorry about the scraggly writing, because that's just coming out from writing on my board. So the risks are basically the China trade stuff, the Canada thing, which if you notice, we had no word out of it today. They're continuing with the overnight discussions. Supposedly tomorrow we'll get a deal. We have the Trump tweets on the regular stuff. And then we have the volatility that's created by it. And that's really what's driving the huge amount of volatility that we are incurring in our markets. Good. So aside from that, we don't have. So that's it. Saying all that, let me just get out of this picture here. Good. And now, as my good friend Lisa and loyal member likes to point out, and a terrific trader, we should get into the technicals. Because what I just explained to you in very simple terms is the noise that surrounds us all the time. We have to deal with news flashes and everything else that happens all throughout the day, overnight, everything that goes on. So here is what I'm looking at right now. Let me get straight to it. From a pure technical standpoint, and this is going to be pure technical, so, and I'm sure many of you will understand, all of you will understand, make it as simple as possible. We have this. One second. Let me get my pen. Okay. So what we have here is what I'm noticing, and this is from the beginning of the year. This was the huge flash crash. Back and forth, obviously, but still, when you look at the bigger picture, this is what it was. So in my opinion, the markets started to go into the channel and get into some level of technical politeness, for a better choice of words. This was technical rudeness, back and forth, back and forth, back and forth, back and forth. All that ended back on May, around the first week of May, and now we can actually draw some semblance of technical charts which we can trade off. This we did trade off also. It was hugely difficult. I did still come off green, but also because I'm a pretty aggressive trader. But for the normal trader, this pattern that started on May 7th or so is something that is that you guys all can manage. Okay, period. So we have a rising wedge. That's what you see here in these magenta lines. And let me just enhance this. There you go. Starting here. So I'm going to just broaden it. There you go. So we have something that we can work off. We have the rising wedge with the first reference point being on June 25th, my birthday. I turned 80. And then we have the next reference point, which is a very critical reference point, which was around the middle of August. And that was right there. You can see the contact points. Remember, we're talking technicals here, so you have to focus your eyes on the lines. And then we have where we are right now. So what we're seeing right now is some moving averages, and let me walk you through this. What I'm seeing right now is that the bull market, the way in its intermediate form and short-term form timelines, is still very alive. I'm not here to give you a long-winded explanation why the bull market will end in 2020. That is not my job here, as per instructions from my members. We're talking about short-term directions here. So short to intermediate term, we are looking at a market which has a 34-day moving average right here, the orange line at 28.50. If we do test in a very sharp drop-off, which can happen anytime, by the way, given the fact that the $200 billion worth of tariffs, and the fact that the U.S. companies begging the Trump administration for a break on the tariffs, many U.S. companies are going to get hurt if the $200+ billion tariff, I keep on saying traffic, go into effect. We could plunge all the way down to this level here, which is the 50-day moving average on the daily. That's 28.23. If we drop from 28.78, where we are right now, you can see that, right? And to 28.23, we are talking about 50 points on the S&P times roughly 7. I always take the higher number. We are talking about a 350 point drop on the Dow Jones. So I'm going to start off with the bearish picture. This can happen. This can happen. And we have to be prepared for it. It doesn't matter the fact that I think Netflix is going to go to 400, which I truly believe it will. It doesn't matter whether I'm scalping 60, 70, 80% type of trade during the day. The 350-point drop on the Dow Jones Industrial Average, which is roughly a 50 plus point drop on the S&P 500 from where we are to here to test the 50-day moving average, is still a valid supposition or a valid trade. It can happen. Okay? I want you to understand that. In the meantime, markets never go down in a straight line. Markets always do this. It hits the bottom of the rising wedge, which is the 20-day moving average highlighted here, and but very important reminder. When I'm putting my charts out there, I am putting some very specific numbers and levels and lines out there. Please try to focus as much as you can, because the reality is that a lot of people just glance over my charts and not look at the specifics that I'm putting through. Never forget, this is my living. I have to pay my bills through this. I do very well. I do very bad sometimes, but I make up the money rather quickly. So the fact is that you all need to focus very hard when I'm drawing these lines. This line here, which I'm sure many of you saw it, is the 20-day moving average. What I try to do also to help all of you tremendously during my heavy trading hours is I write down comments. So I did put down today a few times that 20-day moving average right here is approximately around this 28.48 level. To be honest with you, it is at, I have to adjust it. And of course, you're looking at your own charts. It is at 28.67.64. Now, some of you might not really care about numbers. You're always like, okay, is the market just going up and going down? No, the market's 100% controlled by machines. We try to look at internals, we try to look at the levels, and we look for the high probability trades. Futures right now, as I checked last, are down 6 3/4 point. You're seeing that right here on the S&P 500, not in real time. When we look at the next technical chart on the E-minis, we're going to look at it real time. What I'm showing you is where we closed at today. Where we closed at today was exactly, and then let me broaden the view a little bit more. What we closed at today, and this is not magic, this is just the way it happens with real trading. That's why we do what we do, and we do it very well, is we kissed the blue line here. That's why I drew this blue line. And that's the 20-day moving average. I use the 20-day because it's worked for me very well, and it's paid a lot of bills. Many of you use different parameters on the moving averages, and that's completely fine. I'm just giving you my tools, and then you mix it with yours and you do what you need to do. So look at how powerful this is. This kissed the 20-day moving average and then had a hammer reversal. A hammer reversal is basically what it looks like. This is not a hammer that I can fall in love with. This is a hammer that I can fall in love with. Okay? But these hammers also, which I didn't fall in love with, but did take initial positions back on the 29th of May, also produce results of about 80 to 120% on the SPX and the SPY calls right there. Just this candle and this hammer and buying it at the lows. The hammers that I like, I'm trying to look for it one here, are these. I am a candlestick specialist. Not because I have a lot of nice, what's it called? Citronella candles. I wouldn't say salmonella. That's very dangerous. Citronella candles on our beautiful patios looking out on the waterfront. Okay? I call them Chinese fireworks too, because I love Chinatown, New York City. These are the candles that I fall in love with, because these candles tell me that regardless if the market's going to open down, the next day it did open down. is going to produce a massive result. A long wick, a long tail with a small head. That's exactly what happened here. These candles are kind of dubious. So I take an initial position, like all of you should. But these candles also produce very phenomenal results. So this candle right here is not the one I'm in love with. I have an initial position on the SPX for this for September 14th. I like to buy some time. And I also have some for September 7th, the lottos, just in case we get a tweet which says, Canada deal done. We love Canada. Donald is my buddy from New York City. And trust me, I know his CFO, and I have been to some events where I've had a chance to meet his lovely family. So he is a complete wild guy. You think I'm wild? He's crazy. Crazy wild. He's smart. He's smart. So bottom line is that this could go like this. So the 50, 60 cent calls can go up to $4, $5, $6, $7. That's just the way it goes. That's trading. What I like about this candle is simply because it tested on the daily. This is the daily, so it's cutting out a lot of internal noise from the 15 minutes, the 1 hour charts, which are extremely volatile, right? We're going to look at that in a second. So this tested the 20-day moving average and now is moving. It is looking to break above, and I didn't put this line in yellow because I want people's attention. This could break out above the 2892 level on the S&P 500, and that would be phenomenal. That means we could get up to 2905. Those are the calls we're buying. So some people might ask, like, why is Clue Trading Frank buying the 2905 calls? I don't guesstimate. I try to calculate. Trading is about high probability trades. So I'm looking at this rising wedge and I'm looking at this and saying, okay, it's 2905. So if I'm going to gamble with lottos that go from $1 to 40 cents and 60 cents and then back to $1, I don't have to spend that much money. I'm not going to be broke unless you go crazy and buy way too much. Sometimes you buy way too much and they really are like big, right? But still, don't buy too much. Just buy a reasonable amount and keep on following the charts. Then if they go to 2905, those calls from 50 cents are going to be $3. You're going to get a 500% ROI return on your money. Six bagger. We've done that many times before. In the meantime, what's the downside? The downside is we come back and retest the bottom of the wedge, the 34-day moving average at 2853. I just showed you. And that's going to decimate those lottos. But you could then at that point initiate a pretty nice position as long as these lines, the 34, the 50-day moving average, don't start curling downwards. Now remember, they're 34-day moving averages. This is a 20-day moving average. This is a 50-day moving average. So what does that mean in simple English? A fifth grader can answer that. That means that it will take multiple days, right? Multiple days I'm not using the board, so I'm using my mouse here. Multiple days, 20, 30 days, I would say 10, 20, 30 days to start curving down. The minute I see a curve down, this is my job to do, to help all of you guys. I will sell every single quick rally in the markets. The minute I see, okay, the minute I see this happening on the daily charts, and you guys remember, I'm teaching you things which have worked for me. Deploy it into your tools, and you will see the magic. The minute you start to see even a little turn on the 20, the 34, and the 50, you know the market is going to be heading down for at least 1 to 2 weeks. That's when we retest the 2800 level again, where we bought heavy and made a ton of money. In the meantime, what you need to follow over the short term, remember, always keep an eye on the longer picture, but at the same time, trade short term, grab your profits, while it's going. And let me just show it. I'm always about profits, okay? Yes, I show the big picture and this and that, but I'm not dumb. If I have a nice position and I'm up a lot, I take it down, I'll move the strikes up. Hey, a P&L is only good as long as you, and I'm going to show this right now. 1 second. This is very important, and I want all of you to mentally remember it. Allow me to do this. Trading profit and loss on your platform, whatever the one you're using, E-Trade, TOS, E-Trade, what's it called? I don't know what other people use. Schwab means zero unless you sell and cash out. Does everyone understand what I just said? Yes? No? Maybe? Yes? No? Test, test. Am I still connected?
Yes.
Okay. So this is the reality of a trader, right? Or an investor. That trading your P&L, let's say you are up, doesn't matter. I'm just going to pick a number. You're up $8,000. Okay? Means nothing unless you cash out, sell, and take profits. This is the reality of trading. And take profits. Okay? So what? One more thing that I want to add is taking all profits, leaving the core position, what we call playing with house money, okay, is smart. Does everyone understand what I just said? So you put down, let's say, $1,000 in something, you're up to 3,000, sell 2,000, and keep the 1,000. So that's your core position. Okay, at least you put that 2,000 in the bank. If that 1,000 goes down to zero, you will still have $1,000 left in your pocket. Does everyone understand that? I mean, traders need to understand these basic things, I mean, I do this all day, so I need to explain to you guys that. Does everyone understand what I just said?
Yes.
And this is where traders screw up big time because, and very important that I have to say this, retail emotional traders, and I'll get back to technicals in a quick second, they go for something called all or nothing. It's actually a scientific term. Okay? That means they sell, and that's why I always say I sell 60%, 70%. They sell everything or they hold everything down to zero. Am I right? Yes? Everyone understand what I'm saying?
Yes.
This is important because either they like, oh my God, it's going to keep on going up. They're not watching charts and eventually those options. Remember, we are in options trading. Options trading, especially short term, can be huge, 200% plus or down to zero. I don't want to keep on going about this, okay? Just so you guys understand that you always have to sell when we get the gap opens. I do. I got an earnings thing. We have two huge earnings winners tonight. We have Five Below. What a name for a freaking store. And we have Avago, which was the old Broadcom, which was one of my biggest winners and made me a lot of money in the years above. I mean, years back then. Broadcom, okay, Apple supplier. So that's the way it goes. So saying all that, back to technicals, and we'll finish this off. So this is looking good. So far, this is what I think might happen. It is just a game of probability. So this is what my feeling is, that each of these yellow lines are known as bullish consolidation channels, right? That I put out on my charts. So each of these things result them normally that's like a falling wedge. They have broken out. They have broken out. This one did. This one did. This one, based on the last two probabilities, it's like poker, right? So you got to figure out the probabilities. Whether the Chinese guy sitting across from you with 300 million in the bank is going to beat you. So my game is like this, at least from probability standpoint, technical standpoint, should break out, and the breakout should also basically get up towards the 2900 level. And I already told you like why I picked the 2905, because if I lose all that, then I'm not going to be like crying on the streets. So that's what I'm looking at. Pattern symmetry. 1, 2, 3. This was different. I don't see the similarity between these two. 1, 2, and possibly 3. Does everyone see that as openly that I see? Need some quick feedback, please, so we can finish the session.
Yes.
Yes? I mean, just
Yes.
forget about technicals. I mean, just look at the pattern. It's like a stork, right? Like this. That's known as a bull flag. Right there. Bull flags can really break out. What I also like is the fact that the McLaren oscillator is now kissing minus 89. Could be a little slippage tomorrow. That's the reason why futures are around 6 or 7. But I believe that once they get to these levels, not that I believe, but what I have seen, I only do what I have experienced. Every time it gets down to the level of this, that's why I show these charts, you get a bounce. Okay, that's called a bull flag. Now, unless the fundamental character of the market has changed, which no one can tell, Morgan Stanley's bullish, JP Morgan's bearish, blah, 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 blah. All these analysts, are out there. I come from Wall Street. I know it, how stupid these guys are. If they were right, they would never have guessed the market would be here since 2009. So this should happen. Let's move on to the slower chart. shorter term charts. This is your 4-hour chart, which I like. This is good for traders. And what we are seeing here is something quite simple in my simple eye. Okay, let me just. There's a nice channel, and this is what I see. And please, all I'm trying to do here tonight is trying to show you what I see. Right or wrong, mostly I've been right. I'm certainly not a genius. Lisa knows that. Just kidding. Okay, so McLaren oscillator on the 4-hour. The 4-hour is very important. Real traders use the 4-hour charts to get a very clear idea on a quick 48 to 72 hours swing trade. 4-hour is right now. McLaren oscillator is at 194. Whoops! Every time we got to 194, please look, eyes wide open. Every time we have gone to McLaren oscillator 194. And for definitions, go to Investopedia. We have had a frigging serious bounce, which have lasted a couple of days, if not a day or two. What more can I say? Forget the fundamentals, forget Trump, forget China, forget Canada, forget everything else. Forget what I'm saying. Just look at this. Now, can it slip and slide a little bit more before it bounces? Absolutely. That's the reason why futures are down about 6 or 7 after hours. Now they're down 550. This is one of the most important indicators any of you guys can use. All of you use platforms. Just put in McLaren oscillator. And Mr. McLaren's son, I still subscribe to his service just for his articles. It's actually free. I would still subscribe to it if it wasn't. Write some very prescient and important articles. Things you think outside your brain, like I do. We're weird, you know? We're like these nerds. I'm a market nerd, not a sports nerd. I'm a car nerd and a market nerd. That's all I am. All right? So this gets like this. You want to be a buyer. So we're getting there. On the meantime, what do we see? That's what we call the internals, your internal blood test. Your internal blood test right now is showing you the McLaren oscillator is deeply, deeply oversold. You want to be a net buyer. What do we see here on the stochastics, which is one of my favorite, very simple indicator? We are in a slight, if you squint your eyes, you will see we're in a slight positive divergence, just the way we were here, just the way we were not here. But here and here, positive divergence means the price is making a new low, but the internals are making a slightly higher high. We call that a positive. Anyone remembers, the sign for positive, right? In science class, divergence. So I'm going to put div. So we have a positive div. The biggest of the biggest technical analysts, when you read their, $2,000 a month report, talk about the same things like I explained to you guys 3 times a week. Does this mean it's a perfect guarantee? No, but it's a very high probability that we're good to go, as long as you mix it up with your externals. So what are the externals? Aside from my lovely charts and my lines, the externals are, and if I want to look at it in a very simple term, we broke out of a major range back, please look at the date down here, on August 27th. All we did basically was we came down and retested the breakout level. I've said it in multiple videos from day one that we have to test the breakout levels. The breakout levels have to be tested. If you have this and you break out, to see that this was the floor and the floor is strong enough, then you have to test it. So that's what the markets are doing right now. Is it something that works 100% of the time? Nothing works 100% of the time. But does it work like at least 70% of the time? in my not my opinion, I don't have opinions. That I have traded, yes, absolutely, absolutely. Now, what I like about the breakout level is what I'm seeing here. We are seeing a triple bottom, 1, 2, 3, and a retest of the breakout level, which was a failed breakout on 8/7, right? August 7th. Wow, seems like years ago. And then another failed attempt went back up and fell down on somewhere around like August 22nd. That just seems like years ago. I mean, I can remember August 22nd. And then now we broke out on, to be exact, we were there. We made a very decent sum of money, and that breakout happened on 8/27, right at the market. Right at the market. Many of you who are price chasing and not setting up trades missed the whole trade. This was good for 300%. Everything is documented and recorded on my Twitter feed and on my archives on my charts. 300% plus. You put down $100, you made 400. You put down $1,000, you made 4,000. Within 24 hours, 24 to 48 hours, you put down $2,000, you made 8,000. That means you made $6,000 of profits. Gentlemen, this happens on the service all the time. But the problem that we all have, myself included, and I do well, is we never put in the aggressive money at those tactical levels when they should be put on. Everyone understand that part before I move on to the short-term charts, and then we have to close out because we have to go. Everyone understand what I just explained? Yes, no, maybe?
Yes.
Yes.
Yes,
Yes.
quick response because seriously. Now, risks. Let's say everything goes to hell in a handbasket, okay? Trump goes nuts on China. Canada says F you, walks away. We have lots of supply chains. Which brings me to a quick thing, because I have to explain this very quickly. Lisa, I just have explained this real quick, and please allow me to do that. Because if you guys don't understand supply chains, it is dangerous. 1 second. Because this is what drives the markets. Guys, give me literally 30 seconds. I have to take care of something. I'll be back in 30 seconds. In the meantime, yeah, 1 second. Bear with me. I'm going to show you one chart in the meantime, and I will be gone for literally 30 seconds. Oh, this is, yeah, this will be a good chart to watch. This is the NASDAQ. This is where all the tech stocks we make the big money on are based. This is the actual NASDAQ futures. Give me 1 second. Okay, can everyone hear me? Yes?
Yes.
Okay. We're gonna get into sexy
Yes.
stuff in 5 minutes, and the sexy stuff is all about stocks. So that's where we make the money. So here's one thing I want to explain to you guys. Very important. So just so you understand, like when you hear the news stuff, um, Trump trade tariffs. Okay, here is a word you have to look for: supply chain. Many of you run businesses. You understand exactly what this means. It simply means products are made USA, China, Bangladesh, especially clothes, okay, in different parts of the world. So let's say you put the tariff on China. All of a sudden, they're moving the stuff to here. They're moving the stuff to there. They're actually not moving the stuff to here. Can somebody tell me why all these global companies like Walmart and Kmart, I mean, not Kmart, all these big chains, okay, all of them, Harley Davidson included, um, why they are not moving all the supply chains or the production back to the USA? Just one quick answer from anyone, please, just so you understand what's going on.
Cost.
Thank you, thank you, thank you, cost.
It's a labor cost.
That exactly, cost. Business is about cost. Thank you so much. Thank you so much. Okay, so that's it, and that's the whole thing. Apple has moved. Apple cannot move completely from China, Taiwan. By the way, we had a huge win tonight on Avago, which was the old Broadcom, but they also have a plant in thing. They can move all this stuff to USA because then they have to pay their workers instead of $20 an hour, they have to pay them $100 an hour. If you're a business person, your profits collapse. Your business goes down. End of story. Okay, so that's the whole reason. Business is global. It's economics. You want to go with the lowest possible cost producer, and you move on. But you have to obviously do something which helps the USA too. And I'm a big, you know, I'm a patriot. I mean, I understand what you're talking about. You can go nuts. So anyway, this is technicals. Now, that's your longer term picture. I like this, the 4 hour. I like this thing. We have a good opportunity to make some money over the next couple of days. I am looking short term, but at the same time, I'm not making long-term predictions. I still think we can get up towards the 25, 29, 25, 29, 30 level only if the Canada deal is done and there is some moderation on the China heavy-duty tariff situation. That's it. It's really as simple as that. Now, short term, this is the trade that that we're trading. So if some of you are trading the SPYs or the SPX or even stocks that we trade, um, you have to look at these levels. This is your breakout level going back all the way to August 24th. Sorry, this color was yellow. Okay, August 24th. That's why I have the word breakout level. I just want to explain this chart very quickly to people who are not used to technical analysis so they understand it. This is called a breakout level. This is where we broke out. Really as simple as that. Guess what we did today? No magic. We tested the breakout level. These arrows and stuff were put in place because those are inflection points. Markets turn from there, then they drop. This was a flash crash. We still came out green. Many of us did. Okay? Certain stocks, biotech stocks, or some small niche tech stocks, they don't care. Look at stocks like Cloudera, which was a earnings thing. So this is the point that I want to make, and very, very important. You have to buy I'm trying to keep this very, very short. Hold on. I have to show this. It's very important. Can't get away from it aside from the technical analysis stuff. Okay. Traders. This is what has been successful for me. So I'm just trying to share with you what has been, what works for me. I don't make money on every trade, but the trades that I make money on and the ones I diversify, they're huge. They're huge. Whether, the penny stock thing is a joke. I mean, the BLSP, congratulations, Lisa. I mean, it's like nuts. Went up like freaking 400 some percent before it pulled down. So traders, you have to buy even if it's one call off the, and that's what I do. I buy one or two calls, to be honest with you, and I buy the whole thing of the earnings ER basket. This has been, I have a test account that started off with small, like $2,000, whatever, just to test, like, can small accounts grow big? And it's up huge. It's up 400% plus. 3 weeks. I'm not joking. I'll show it to anybody. Okay? And a lot of it came about from buying one or two calls of the earnings basket. All right? Second, strategy. I'm just trying to help. Stop trading the same, you know what I'm going to say, Lisa knows it, big names. Okay? Diversify. When I'm putting down things like, what's it called? Cavaro growers, whatever. Calls were 95 cents. We sold them at $2.20. Okay? Diversify. It doesn't matter what names you know. It doesn't matter. Add lotto plays. Okay? So diversify into different names and add these lotto plays. Lotto plays are generally, the lottos are generally anywhere from, sometimes they're 40 cents. Sometimes they are $1.20. A lotto is basically anything less than $2. Okay? They don't have to go nuts. But most importantly, trade names alerted, because I'm always doing some background research before I'm putting out these names. You don't know. Alerts. And you will see the difference. All right? Everyone understand that part? It's very important because it really helps. Yes? Can everyone hear me? Are we connected?
Yes, I understand.
Okay, sounds good. That's Jack?
Yes, it is. Hi, Frank.
Oh, how you doing, sir? How you doing? Okay. So good. So very important. I mean, simple things, man. Simple things that I've played. So now we're going to get into the. Let me just clean this out. So this is what's happening right now. The foreign markets are opening, and we're starting to see a minor reversal. The next thing that I follow very quickly on my chart is this chart, which is the 1 hour chart. As you move away from the short-term charts, and remember, you don't have to trade 15 minutes, 1 hour. I'm just showing it to you guys so you understand it. These flash crashes happen quite a bit. It's happened here. It's happened here. Back on the early latter part of August. Now it's happening here. But these arrows, for somebody who's not technically orientated, are meant to be where you want to get out of things. Now, it doesn't mean you need to sell all your positions, but these are the levels that you want to see where you say, you know what, things are looking good, prices are running up. Don't get too excited. Don't get too excited when your P&L is going higher. Certainly don't get excited. Depressed when your P&L is lower. So I trade these charts like a block. Each of these candles are big money. And this is when the market goes, from being down 100, goes up to almost even. And that's just the way it happens. This is your daily chart, in my opinion. Very important. If some of you are following, this is where I see the turn happening. And that's called big money. This is where the big money's made. All right, guys, just straight facts here. Once the stochastics hits down here, because that's what happened last time, August, late August, and now it's happening. So it comes down here, it starts to turn. You want to be very aggressive. That means the market will probably pull back a little bit more, hold this megaphone channel, these lovely magenta lines, and then go boom. That boom doesn't mean we're going up here. That simply boom means that you're going to make 300% on your money, and you want to feel really good. So whether it's $100, $100 is tough unless you buy the cheap lottos. $1,000, you're going to make $3,000-$4,000. You put a little bit more than $1,000, you're going to make a lot of money. But we're not there yet. We're getting there. Hopefully we get there tonight, because these are futures. That means futures can reset while we sleep. And if it breaks below this, of course, the ultimate buying points are these levels, which are literally where you make 1,000% on your money. And you get rich. You get rich with small money. Do we get there? I don't know. I don't think so. Because the last couple of times we've gotten here, that's why you have the red line, where you want to be the most aggressive buyer. And so far, so good, as long as this channel holds. And I put the comments out there. Stocks that any of you guys want to see, I'm going to leave it to Q&A. That's my big picture on the markets. And here's a picture on the S&P 500, not futures. You can see what's going on. To me, it's clear as day. Do I know exactly what's going to happen? No, I'm not God, okay? I pray to God. So, can this happen? Absolutely. Can this happen? Absolutely. Do I know what levels to take my profits and stuff? Absolutely. Do I like the internals, which had a positive divergence? What is a positive divergence? Prices made it lower low, yet the from here to here, for example, yet the stochastics made a higher high. Higher low. That to me, that's called a positive divergence. Positive divergences, this is a 1 hour chart, normally plays out within the next 24 hours. What does that mean? Futures will most probably hit 28.93 and boom, come down. If the market wants to come down, or otherwise it's going to break out, in which case you're going to be very aggressive on the breakout. Just the way you're traders, just the way you're very aggressive. I have to put this out. This is so important. Things I've learned. Bear with me 1 second. One second. I have to say this before we get into the last part of the technicals, and then we're going to finish the session. Boom. Okay. Aggressive buy points. And all of you, you just got to keep on doing this, because just like life, you keep on doing it, all of a sudden it's going to click. All of a sudden you'll be like we say in New York, excuse my French, fuck yeah, I get it. Okay? So that F yeah, I get it moment is only going to come as long as you're going to use your own gut feelings and and some of the tools that I'm showing you. Okay? That FU moment where it's going to be just like, I know it, it's going to happen. And I'm there. All right? It just happens. So in order to get there, I can teach you that. You just have to get there on your own. But you have to use the tactical tools. You have to use your own feelings. Remember, your own feelings matter a lot too, because you guys are all smart. Markets are not that difficult. And I keep on telling myself it can't be that difficult. Yet it is, because of volatility. But it's not that difficult. Use my charts, use your own feelings, and go with it. Just do it. So aggressive buy points are tactical lows, and breakouts. Okay, so one is buying the lows and one is buying the breakouts. These are the two most important momentum. Well, that's a momentum trading points. Look at the drug stocks. Tillery, we made a killing. CGC, we made a killing. But tactical breakouts are what's momentum. Tactical lows are what is basically base level buying. Does everyone get this part? Yes? Maybe?
Yes, Frank. Yes.
And this is important. And this is not something, this is like warfare, right? You're out on the field, you're like shooting at the bad guys, and they're coming from all sides. So the tactical lows are, look, when you know they're weak. The tactical breakouts are when you know you have them and you pummel the crap out of them. You drop the JDAMs all over, right? So those are tactical breakouts. Tactical lows are when you have to have reconnaissance. You go in there, the boys go in there, and they flush out the tunnels. You get it? That's army technology, military stuff.
Got it.
Yep, exactly.
Roger that.
Yeah, there you go, brother. All right. So tactical lows are when you flush them out big time, drop a couple of like hardcore, like, C4s in there in the tunnels and blow them out. And tactical breakouts are where you just literally pummel them hard and they're done. And tactical breakouts are important, but then you got to move back after that. All right. So that's it. Now, I have a question here from a good friend, Exida, old member, Roku, Exida. Okay, so let's take a look at, oh, I had it there because I was reading it. Square's chart is just sick, Exida, okay? Square is something that honestly, I mean, chart-wise, this thing is going to $100 easy. If I wasn't a trader and I just wanted to sit on something, I'd buy the figging stuff out of Square as long as these candles remain green. Honestly, no question about it. As a trader, I put marks. Remember, we were buying and trading Square all the way from the 40s. Look at this chart. It's sick. Square is a hot stock. It's a hot company. And that's it. Now, can it pull back a little bit? Can it get down towards 84? Can it pull back all the way to 80? Absolutely. But you want to be a long-term investor in Square. On a short-term basis, the way I look at it, based on my charts, is you got a doji, right? That doji is basically, and Square was, listen, let me just be very clear about one thing. And this is one thing I have to show. And because you guys have to understand this before technicals. And technicals can only take you one place. But if you don't understand the background, it means nothing. Everything that happened on techs, right? Whether it be Apple technology, nothing, mark my words, nothing to do with fundamentals, what we call fundies on Wall Street. Do you understand that? Fundamentals. All hedge fund margin sellouts. When Apple falls for no reason, margin sellouts. When Apples fall for no reason, 3%. Netflix, 6.3% yesterday. You want to buy. Why? Why did they fall for it that hard? Did Netflix lose customers? I mean, it's a joke, guys. Understand what I'm saying about this. Okay, this is all the vortex of hedge funds. They're losing money. They're being idiots. They're selling when they're scared stuff because everything is on margins. That's what kills them. So the charts start to look distorted. In my opinion, Netflix is the best long intermediate term tech buy right now. Apple still goes higher a little bit. Amazon, way overvalued. Yes, it's going to go up $40. And the stock eventually is going to go to 3,000. Tesla, freaky stock. Elon gets his act together, gets the CFO and CEO hired, the stock will jump $30 in 1 minute. So Square, good to go. Next one that you asked for is Roku. Roku I have, and I'm going to pull it out. Look at what's going on. This is algos at work as you speak. And if you go deep water fishing, I have like once or twice. One of my best friends and most loyal members who's too busy running his multi-million-dollar business. I'm just kidding, but yeah, he is. Fish eyes catches one of these big fishes, and he always sends us pictures, right? So that's catching the fish. Look at this move. Right there, futures traders are up about 100% if you bought it down here. 28.72, 28.76, they're up good 60% on the money. Here's your gap. Here's your gap fill. Here is what the market closed at. 4 o'clock, right there. And this is what we need to break out of tomorrow morning. That's why I follow charts. Forget my thoughts and processes. It's just the way it goes. There you go. Oops, what's going on? There you go. Once we break this, it is bear kill season. But once we get here, selling. That's why it's called the downtrend line. Okay, next one. We need to look at Roku. I actually like Roku a lot. I used a Roku box once, like 3 years ago. I'm like, what's this garbage? The company has changed big time. But then I'm not a big movie watcher, so it doesn't matter. I just watch Netflix. I watch Xfinity free videos, and that's it. Miss Axida. Roku is, this is the chart, by the way. I didn't design it tonight. It was there way back, going a lot higher. That's it. It's going a lot higher. Fundamental reasons. Everyone's bundled Roku in their thing, and Roku's subscriber base is going higher. I even have no clue what Roku exactly gets the subscribers from, but that's not my problem. That's why I'm a technical analyst. And I am showing you exact levels Roku can go to. If you're a swing trader, you want to buy some Roku swings out, like 6 months out. Remember, Roku has nothing to do with China. Roku has nothing to do with agricultural exports or soybeans. And Roku just has to do with the fact that we're going to sign up more subscribers. The stock is good for $76 long term. And I can bet your butt some big shot analyst has the $76 price target. I've seen it happen over and over again. Short term, 68. Base level support is right there, what it shows, $59 on a swing trade. If it breaks ever 56, short the crap out of Roku all the way down to 54. You're going to make a lot of money. But right now, given everything that I see here on the daily, the stock at least will hit 68. China or no China, Canada or no China, Canada, whatever. And if it breaks into this complete bear kill zone, it is going to go to 76. That, in my opinion, will happen by next earnings conference call. Is that good, Exita? She said, I'm coming back in the room starting Monday. Trading every day now. God bless you. Love you. That's great. Okay. That's exciting. Exita is very smart. Very good friend. And that's it. All right, guys. Any other stocks? Netflix. Let me show my favorite Netflix before I run out. And thank you all for attending. Really nice that you guys all did because it's nice. That's it. Because without your support, we wouldn't be around, right? So Netflix chart is, to me, a complicated chart, but I am loving it. Can anyone tell me why I'm loving it based on the internals? I've already given the answer. And this is an hourly chart. So that means you don't have to wait for years and weeks. It can happen within days.
Stochastics turning up.
Yes, and the stochastics look beautiful. We already made money on Netflix. Yesterday's calls that we bought at $1.10, $1.20, we sold at around $3. That's 200% on your pocket right there off the bat. We did that. And then we started to scale back in. Netflix, fundamentally, is not a company you value, and this is my Wall Street days, on numbers. Just the way Amazon at $100, $200. Where's Amazon right now? I can't remember. 2,000? At 100, 200, they said, oh, it's never going to make profits. All it does is sell stuff to people. They never make money. Yeah, it's true. But Amazon's real business was AWS, Amazon Web Services, where all Netflix and Facebook and all these other big companies held their storage. Remember, got to store your stuff somewhere. Netflix is nothing to do with storage. It has to do with distribution. I don't even watch Netflix that much. I just watch some of the shows. I watch some of the documentaries. I think they're brilliant. All I know is I don't even watch it. And my 10, 11, 12 bucks keeps on going every single month. So if they ramp it up to $5 more, you think I'm going to cancel? I don't think so. What somebody going to say? No, I don't want to watch these great shows for an extra $3, $5. I'm just going to go to Comcast and pay my whole freaking mortgage to Comcast. I want to dump Comcast. Trust me. Xfinity. How much do we pay? Like $300+ a month? For what? For garbage? Unbundling is what it's all about. The future is just starting for these guys. Okay, India. They just signed with one of the biggest Indian distribution companies. They are going to get in China at one point. What's China's going to say? We don't want to watch any bad movies about us. No, Netflix is showing good movies. Whatever the case, here's the technicals. You have a very large cup. You have a nice handle. You are going to see this. The gap fill is right there. This is actually the real gap fill. This is the fake gap fill. That's 380. As long as you can persist with the stock, you're fine. This, to me, is completely okay. And as good old our new member Jack said, very rightfully, all you got to do is follow the stochastics. Will it zip around a little bit? Absolutely. Will it come down a little bit? Maybe test 331. Everyone's going to freak out. In my opinion, keep buying. Because it's going to go to 356 like it did this morning. And the big sell-off that came from Europe and multiple hedge funds blowing up. It did. There's 7 small hedge funds that blew up. That's from my old contacts from my good old days on Wall Street. That's serious. Okay? They're not US based. They're Hong Kong, Asian, and European based. They're all margin to the hilt. They have no idea how to read charts. They're just chasing prices. Which reminds me. So Netflix, I should say the last thing. That's it. So this is what I'm looking at. In between, I can make this move alone from yesterday was 200%. $1 to $3. That's 200% in your pocket. Now, what if this move? That's 600%. Now, there could be a downgrade. There was a huge upgrade. $440 upgrade on Netflix today from Piper, I believe. Do I really care about upgrades? No. Do I like it? Yeah, I like it. Want to see a beautiful pattern? Can somebody tell me what is this pattern? What's this pattern called? Quick.
Something saucer.
Inverse head and shoulders.
Yes. That's what I want to hear. Inverse head and shoulder. You got a big head, and I got somebody's dog. I love dogs. We got 2. Inverse head and shoulders. Multiple head and shoulder. Inverse head and shoulders. Like Kramer would say. And by the way, I love Kramer when he explains technical analysis. It's so simple. I'm like, okay, that's so great. But then he's explained to mom and pop who give no crap about technical analysis. All they're doing is chasing prices. Which I'm going to be the last thing I'm going to say. Yes, it's a very large inverse head and shoulder. With a neckline. Right here. That's exactly where the stock faltered. Break the neckline, 377. Want to make some serious money? Keep on scaling in. What does scaling in mean? Scaling in simply means that you got to buy and then buy a little bit lower. And this is the last thing I'm going to say. Whew. Thank you. By the way, who said inverse head and shoulder, by the way? Who is that?
DC.
Of course. Good old Mr. Walter. Okay. So, 2 things. Not one thing, 2 things. What movie did it come from? DC, you probably know. It's only 2 things. One thing, first thing, and the second thing. What movie was that? It wasn't The Godfather. It's 2 things. Okay? Like we said in New York. There's 2 things. Number 1, no one knows what movie it was?
Goodfellas.
Thank you. There you go, Jack. Love you, man. So 1 thing. There are 2 things. There's also a 3rd thing. All right? So there you go. Exactly. 2 things about trading. Number 1. I'm not losing my thought process here. So what was I going to say? I totally forgot I totally forgot. Can somebody tune me in? There are 2 things about trading that I was going to say. Oh boy, I really blanked out.
You were just you were talking about Netflix and the head and shoulders, the inverse head and shoulders.
Okay, so I'll just make it up. But I totally forgot the part. I'll be honest with you. I'm a straightforward guy. Totally forgot the part. One is the IHS pattern, inverse head and shoulders, inverse HNS, big money trades on swing. So you got to look at them on the daily, or you want to look at them on the 1 hour or 4 hour. Number two, I totally forgot. I can't believe it. It's going to come to me. I'll put it out there on the tweet. Number two is, let me just put this through. Fundamentals, what most of you look at as PE, mean nothing. What you have to look at is PGE, okay, which is price to growth earnings. Okay, so what that means is, I'm going to explain. Valuing, last thing I'll tell you. Valuing, I totally forgot what the two things were, by the way. Valuing growth companies, PE, means crap. That's to value industrial companies like the Boeings and stuff like that. For growth companies, you want to basically do price to earnings. You divide the PE by the growth rate. As long best is PEG, which is below 2. Okay, that's it. Just the way price to earnings multiple, they say higher than 10 or 12 is bad. You want to look at PEG below 2. So in other words, if their price to earnings multiple is 16 and they are growing at 32, the PEG is 0.5. Does everyone understand that part? So that means the stock will really go higher. If the price to the price to earnings growth, the PEG ratio runs above 3, that means the stock is overvalued. So that's the only valuation analysis, simple valuation analysis I want to tell you guys. So when they measure these great companies like Amazon, Netflix, Google, Square, Roku, you name it, okay? It's always the growth. And the dumbasses who come on TV and talk about PE, I feel like slapping them. And they get paid for talking garbage. PE doesn't matter. The price to earnings growth ratio. So whenever you're looking on the different, on Google, like, whatever you're looking at the thing, always look at their PEG. As long as their PEG ratio is 2 or lower, from a fundamental standpoint, look at the charts, look at the fundamentals. That's the way to go. On that note, guys, let's have a great finish to the week. I have no idea what the futures are. Futures are right now only down 1. And that means we are going to basically close this. Hold on. My sync board. Jeez. Bingo. And we will look at futures. And this is what's happening. This is what's happening on the actual futures. You see candles like this, I see patterns. Just the way Jack, our pre-trial member, and we'd love to have you in the crowd, Jack. You definitely are seeing the right things we're seeing. We got a triple bottom. We got the stochastics moving up, as he correctly pointed out. We are at least looking for a move up to 28.83. That means we are going to be up 6 points. More importantly, we would like the pattern completion out here at 28.95. Do not get excited because that is going to be the sell point. a very decent sum of money. That is your pattern completion. And that is when the stores are going to get overbought again. They're going to reset, and the cycle will start over and over again. Now, on the daily, this is what we're seeing. And this, to me, is what keeps me in the game. 1 second. This is the actual futures on the daily. This is the supposed big boys are watching. If that's the case, this is still, we're looking at a maximum move of around 29.10 or so before the markets falter again. Now, what the most exciting thing is, if anyone can answer me, what are we starting to see on the full stochastics on the daily? This matters to your pocket, any trades that you have out there, anything that you will do tomorrow. What are we seeing on the full stochastics on the daily?
Starting to turn.
We are starting to see the turn. It's really as simple as that. Thank you, Jack. If the turn is real, if somebody wants confirmation, they want these lines to cross. Once the lines cross, it is going to be boom. That's just the way it goes. Thank you for attending. You guys are great. We're in this boat together. I mean it. We're all trying to get somewhere. And it doesn't matter where we're going, we always have to give. Keep on giving to your favorite charities, the armed forces, the other people that you love. God bless America. We're in the best place in the world. Thank you so much.